I'm joined in the studio by Lauren Rosborough. She's a senior currency strategist at Westpac Banking Corp, and she's right here with me in the studio. Well, David's just been talking about the possibility that we could see exit strategies being implemented for the euro area. What's the impact for the euro?
Well, euro's been range trading for quite a while now. We're in this broad uptrend from March, so the trendline support comes in at around 147.90.95, but euro's failing to break through that 150. The central bank has continued to say that taking away some stimulus is purely because the market doesn't need it anymore, so it's extracting liquidity rather than tightening monetary policy. The market is concerned, however, this is monetary policy by stealth.
Right, so, looking ahead to 2010, what happens with it and the dollar?
Well, the ECB is in the situation where, one, they haven't loosened monetary policy as much. However, they do have a strict inflation target or a strict inflation mandate. So they are more likely to increase rates before, say, for example, the FOMC. Right,
we've got gold at $1,177 the ounce. We've got some people out there, such as Jim Rogers, suggesting we could see $2,000 the ounce. Does that mean that if you had this inverse relationship with the dollar, that we could see another 50% decline in the greenback? And what's your view on that?
There's two things going on with gold, and that is people are buying it as an inflation story, potential future inflation risks given loose monetary policy, but also possibly on a risk story. In other words, the market are concerned that we could see a double dip and hence to buy gold. There's also the currency debasement story. The correlation between the dollar and gold is quite strong, exceptionally so at the moment. The correlation typically between gold is with the Aussie and less so with the dollar. It does tend to move around that, 100%, 90% correlation. Even we have seen positive correlation with the dollar. So that decoupling or that correlation falling off is likely to occur in 2010.
Yeah, you're talking about, well, 2010, a softer dollar into next year here as well, but the key word is volatility will reign supreme. Why should that be the case?
Well, softer because the US economy still has a lot of lingering risks. And when you look around the rest of the world, Australia in particular, there are countries that are showing upbeat news, strong global macro story.
So did we get a wholesale re-rating in the Aussie?
Well, we haven't yet called a parity party, but we're getting close to it, certainly. I mean, Aussie, once again, is range trading like we are seeing currencies going into year-end. There is likely to be some volatility into year-end, but there'll be two stories next year. One is the macro story, of which Australia certainly outperforms, and the second one is monetary policy.
Certainly one thing which is clear is there's no place to go on holiday if you don't earn in Aussie dollars, is it? Let's take a look at sterling as well. Bank of England Governor Mervyn King yesterday saying that the economy still faces what I'm quoting here is profound challenges. Does sterling also have profound challenges ahead of it?
It certainly does. What you're seeing, though, is cable's not responding. It's not responding to the news that the Bank of England remains dovish. Now, our view is there could potentially be another 25 billion worth of quantitative easing come next year. We're not seeing any traction in the growth numbers, and yet euro sterling and sterling in particular isn't really going anywhere. Our view is, however, on a relative story that the amount of stimulus pushed into the UK economy should see traction, albeit belated. Hence, euro sterling, medium term, continues to track down.
I'm just looking at GDP here as well. We've got the revision of GDP this morning. What do you expect from this? Do we expect an improvement and a revision to the upside?
We have minus 0.4 for today, so broadly no change. Markets at minus 0.3. This is second news, second derivative news, as it were. The market will be looking at durable goods orders and also looking
out of the US, yeah.
Out of the US, and also looking
very volatile number, though, Lauren.
Absolutely. The business surveys have been positive, however, so we are on the positive side of expectations. We're going into a short week, though, so the markets are likely to continue to range trade.
Yeah, Thanksgiving tomorrow, of course. Let's also just talk briefly about one other thing, which is your trade of the day.
Trade of the day are to be selling euros up around the 150 and buying at around the low 148.
If we hit 150, that's the thing.
Well, we are very close at the moment.
OK, let me have a look at how close we actually are to it. I think we're at 149.97, so it is, well, more or less 150 there. Lauren, thank you.